We have Asana. They just reported earnings yesterday. Probably one of the best quarters they ever posted. I really think it's just a matter of time before this thing starts to move. But currently at $14.63. It did have some action pre-market and it did shoot over $16, but it just settled around where it was. Still a $3 billion company. But they just had some really great earnings. The new CEO just started, Dan Rogers. Dustin Moskovich is still chairman of the board. Insiders own about 64% of the companies. 64%, that's huge. It is also heavily shorted, so 18.77% of the shares are sold short, and there are only 83 million shares. Current institutional ownerships is sitting at an all-time high, still getting a lot of downgrades from all these analysts, and still huge insider buying from Dustin. August 21st was his last purchase. He currently holds 57.8 million shares. 57.8 million? So let's check out these earnings. Let's check out some of the highlights. All right, so starting it off with total revenue. Quarter two, they posted $197 million in total revenue. That is up about 10% year over year. We're at 2 years, 8 consecutive quarters of total revenue growth year over year. So they posted negative 20 cents versus negative 31 cents. That is up 35% year over year. 8 consecutive quarters of year over year earnings per share growth, 2 years straight. Profit margins are sitting at 89%. A company that has an 89% profit margin, I mean, that pretty much shows it's a monopoly. They pretty much have no competition or small amount of competition. The dollar-based net retention rate, basically this number shows how much recurring revenue a company keeps from its existing customers. Come back to the cash flows real quick, but go down right here. One of the main KPIs we do want to look at is their core customers, are customers that spend $5,000 or more. And then there's also another section where customers spending over $100,000 or more. So they currently have 25,006 core customers. That is up 9% year over year. Quarter two of 2025, they posted 22,948. And then the number of customers spending $100,000 for Asana has jumped up 19% year over year to 770. If you take a look at the long-term trend, they're pushing more for customers spending $100,000 or more. So as you can see, it's been in the double digits. It's been in double-digit growth for the past 2 years. And when you take a look at their core customers, it's not really growing as fast as the customers spending $100,000 or more, but it's still growing. So let's go ahead and go back to the free cash flow and cash flow from operations. This is the important part, guys. This is where we're starting to see some improvement and we will start to see a pickup on that share price. We are currently sitting on 3 consecutive quarters of triple-digit growth on free cash flow per share and cash flow from operations. Now we have 3 consecutive quarters of also posting positive free cash flow per share and cash flow from operations year over year. Check out that growth rate, guys. Triple-digit growth rates. For quarter two, the latest, they posted 39 million versus 15.9 million. That is up 145% year over year. And then 0.15 cents versus 0.6 cents. That is up 150% year over year on free cash flow per share. So we're starting to see a pickup on free cash flow and cash flow from operations. 3 consecutive quarters of positive growth. For Asana's 2025 fiscal year, that was the first year where they posted positive cash flow from operations. This is annual. That was the first time they posted positive, and then trailing 12-month, it has already surpassed the 2025 year. This year's off to a great start already. One of the most important numbers, of course, is free cash flow per share. A stock price usually tracks its free cash flow per share. Again, 2025 was the first year of posting positive free cash flow per share, and we are already at 0.14 for the trailing 12-month. So it's looking good. It's looking good. There are some huge improvements on the free cash flow. Lastly, when you go down to net income, posting negative 48 million versus negative 72 million, that is up 33% year over year. So huge improvements for Asana. Remember, guys, they're posting negative net income still because when you go up to operating expenses, they are spending a ton of money on R&D and sales and marketing. We'll make a whole separate video on the details of research and development and sales and marketing. To summarize that part, they're posting negative net income because under GAAP accounting, sales and marketing and research and development are expensed in that year that they use it. They're not allowed to depreciate. They're not allowed to amortize. So since they are a tech company, it makes it look like they are still losing money. A good way to think about it is this is an investment. They are investing in research and development, and they are investing in sales and marketing as a tech company. Again, I'll make a whole separate video on that part. Let's check out the balance sheet real quick. Okay, so balance sheet looks good. $475 million in cash. They have $36.8 million, but that's nothing. $3.4 million interest expense, $36.8 million in long-term debt. That's peanuts compared to the amount of cash they have. They do talk about how they have a strong balance sheet, and because of that, they are returning some value to shareholders. In quarter two, they repurchased 27.8 million of their shares, 2 million shares. Dustin owns what, 57 million? The company repurchased 2 million shares. And then as of July 31st, Asana has 128.2 million left available to repurchase shares. And lastly, guys, when we go to the earnings transcript real quick, they do have a backlog, which is a good sign. Remaining performance obligation. So remaining performance obligation is important to look at and to track. So it's future revenue for Asana that's already in the contract. They just haven't recognized it yet on the financial statements. Remaining performance obligation, 507.3 million, up 29% from a year ago. They will be recognizing this over the next 12 months. So Asana is looking good. Asana is looking great. And so after seeing all that, again, one of the best quarters they've had in the past 2 to 3 years, but the stock has stayed flat. When we take a look at year to date, we're still down 26%. So stock pretty much didn't react at all with one of the best quarters they had. They're starting to turn things around. I think this company is a money machine. People just haven't realized it yet. They have 90% gross margins. For every dollar the company makes, they get to keep 90 cents. This company is a money machine. The stock hasn't moved. I think this thing is so coiled up. This thing is so coiled up, ready to go. We shall keep on waiting and holding this company. I really like this one, but I think they have finally turned the corner. They're going to start raking in some cash soon. I really think we're almost there. Anyways, thanks for watching, guys. Quick quarter two review of Asana. Let me know what you guys think below. Thanks for watching the videos. If you're new here, don't forget to like, subscribe, and we shall see you on the next one. Have a great night, everyone. Peace.